Hi there, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Minda Industries. Is it a buying opportunity at these levels or an avoid? So let's get started. First, of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about Minda Industries, a small request, kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts I put up from time to time. Also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. Also, if you cannot pay on Patreon, you can kindly email me, and we have other ways of getting the membership done, so you can get that as well. Now about the company, it is a leading auto component manufacturing company and boasts of marquee clients in all divisions. Their major business is in Europe and US. They produce multiple car parts like switching systems, acoustic systems, and alloy wheels. The market cap of the company has dipped and is around 25,000 crore. It has a very decent dividend payout scheme as well. In terms of financials, these are December numbers, December FY22 numbers versus FY21. So sales went up by around 21%, but profit dipped by around 15% based on the problem has been higher cost and higher expenses that occurred. So margins were seen under pressure even in December quarter. Margins dipped to 15% from around 17-18% a year ago. There is high promoter and institutional holding with only 9% free float, that is with the retail investors. But overall, the company was doing well. But in December and March quarter, it looks like things are going to dip even further with the raw material prices going up and shortage of semiconductors, etc. These all culminating into a lot of problems for most of the auto ancillary companies. In terms of performance, stock is down 40% from the highs of October 2021. It is down a lot from those 1200 levels. Was stretched at the top last year. It was trading at 100 times. Numbers have been decent considering the conditions. Numbers have come out good, but global uncertainty is weighing on sectors, and that is a kind of a problem. Plus, semiconductor shortage is another issue. Higher raw material prices another issue. Plus, crude prices going up to $110 is a big thing for India, which imports crude. So a lot of manufacturing firms are going to feel the heat, and now with a hike of 40 basis point from the RBI, I think all these companies which have even little bit of debt, which are, you can say, micro level or smaller companies in a smaller manufacturing sector base, I think they are going to feel the heat over the next couple of quarters. There's strong promoter and institutional holding and high dividend yield, but yet I believe that the sector altogether, because of lower demand and higher expenses, is going to be under pressure for at least the next 2 quarters. So why I believe the slowdown will remain and is remaining. Auto industries has been under stress with lower demand over the last 2 years with work from home, etc. Stalled business, hurting business badly. There are issues where in a number of, you can say, geographies they are not able to sell that much. Plus now you can add to these factors a factor of higher crudes and a factor of higher, you can say, interest rates that are going to really affect the industry altogether. So there is a fear of economic slowdown, which is escalating globally. We have the England benchmark rates that has gone up. We have problems in US where the rates have gone up by 50 basis points, and I think it's going to continue going forward. So the sector is out of favor and may remain out of favor for the next 2-3 quarters. So there will be pressure in the industry at the moment. So my call here is, if you have it, then hold on to it. There's no need to probably sell or run away. Have a 2 3 year time frame, and hopefully things will return, and hopefully this sector will bloom over the next 3 years or so. I think the growth is delayed by another 6 months now. I was expecting that from the start of 2022, autos should do well in auto industry, but there have been a number of headwinds that have come along. So probably from next year onwards, we should see a better move in the industry and in this sector. Yes, any further declines 10 to 15% from here is a very good buying opportunity. Don't trade into this sector, trade into, you can say, stronger sectors whenever strength emerges in the market, and put only 5% of your total holding into such stocks. So this was my video on Minda Industries. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.